Oakley Capital is a successful pan-European franchise that focuses on technology-enabled businesses. Benefits from a 20-year track record and a highly entrepreneurial DNA that is evident in its deal craft. The Oakley funds have scaled successfully, and we can see that by the top quartile performance consistently of all funds. They have gone from around 300 million in 2007 to a 2.9 billion euro Fund 5 raised last year. The firm raised Oakley Origin in 2020, and that is the lower mid-market strategy that allows the GP to cover and invest in a part of the market where it was so successful earlier in its development. As Fund 4 onwards scaled, these deals became too small to be covered by a fund, so a dedicated standalone strategy was needed. And indeed, Origin 2 is the continuation of that successful Oakley strategy from earlier funds, targeting substantially the same companies but at different size brackets. Fundamentally, we like the European mid-market. Industry performance data from PitchBook shows that it offers the potential for an attractive risk-reward, with the lower leverage levels compared to the large mega space, allowing for reduced loss rates. Similarly, smaller businesses can on average exhibit faster growth rates. Although they are smaller and typically less professionally run, they also have greater potential for geographic expansion and managerial upgrades that make themselves evident in multiple arbitrage upon exit. We see great consistency in how the Oakley strategy is executed. Deep sector insights from repeat investments in subsectors, effective use of the entrepreneur networks that give the GP proprietary angles in uncompetitive deals. Thirdly, comfort with deal complexity that translates into more attractive entry multiples and again, potential for multiple arbitrage upon exit. And then finally, the leveraging of the wider Oakley platform and its operating partners. Turning to performance, it has been very strong. The realized overall track record of all Oakley deals stands at 4x and 67% IRR, with all funds being top quartile. If we hone in on the realized track record of all relevant deals to Origin, these are deals below 50 million euro equity checks, that stands at an impressive 7x and 97% IRR. And although early, the performance of Origin 1 stands at 1.4 net and 47% net IRR, even though it was a 2020 vintage fund. The early liquidity brings DPI to 40% of paid-in capital, which is quite impressive for a fund of this vintage and ranks it in the top quartile on that measure as well. The team focused its diligence on how the dedicated execution team of Origin is integrated within the Oakley platform, as well as the caliber of the senior team. The investment team found that the Origin team benefits disproportionately from the network of entrepreneurs, as well as the institutional knowledge of the GP. This is not just about backing the Origin team, but actually backing the wider Oakley platform. And equally, the caliber of those individuals in the Origin team is very strong, and we feel they're very well placed to deploy this fund. The Titanbay team also spent time understanding the upcoming pipeline, as well as the rejected deals and the rationale behind those. And finally, we spent time challenging and understanding the track record, and in particular, the strong early performance of Fund 1. Oakley is a European mid-market GP, targeting opportunities in tech-enabled businesses, education, and consumer. The companies themselves tend to be local or regional niche market leaders with strong brands and significant potential to internationalize. We also see an upside risk profile, which means that this is a more ambitious strategy with potential for individual outperformance, but also potential for higher loss rates.